Goose, welcome to the show. Thanks for coming on to the Systems for Business podcast.
Mate, it is my absolute unadulterated pleasure. Thanks for having me.
All good, all good. So Goose, the reason I wanted to get you on, you've scaled your business and shown up in a way that I really rarely see. Obviously we've been working together for a bit over 12 months now. I've known you for probably 18 months, something like that.
Yeah, 18 months, yeah.
Yeah, and I wanted to get you on because, look, you have bursting amounts of energy. I know that you're here to do something very big in business. And look, let's start with your journey. Let's go back to the beginning. You're running a buyer's agency. Why did you start the business? Tell us a bit about what led you to now.
Yeah, totally. So there's going to be quite a lot to unpack, right? So this is either going to be a really, really long episode or a really fast one, or we might have to do two. So I guess for me, I'm probably the antithesis of your average kind of real estate professional, right? So it's a bit of a funny industry to come into. My background is actually not in real estate at all. It's actually in festivals and events. And so my journey to entrepreneurship started when I was quite young. I actually left school, high school dropout, I started running my own company and doing all of that kind of stuff. And that was the kind of start of a 15-year journey in festivals and events. So I traveled the world either organizing, managing, or working at some of the world's kind of biggest festivals, music events, stuff like Burning Man, things like that. So it was pretty cool. It was pretty fun, 15 years. But by the end of it, I had companies in 4 continents, registered companies in 4 continents. I had an event management company and I was running my own festival. But at the end of it all, I actually found myself basically addicted to drugs, addicted to alcohol, and broke. And in fact, not too long before I decided that I needed to change. In fact, when I first met my partner, Gabby, I literally had no money. I was a drug addict. I was an alcoholic. I was depressed. I was living in my office because I was homeless and I had nowhere to go and I had no one to turn to. Like life was pretty grim at that point. Then that kind of kickstarted that. Then I met Gabby at that time, and that kind of was a bit of a turning point for me when I suddenly went, hang on a second, maybe life isn't that bad, and maybe we can sort of turn things around. And then it was kind of through that we sort of went on our own journey into trying to, I was working 100-hour weeks. I was burnt out. Like life, I was looking at my life and going, this is not what I want. This is not what I set out to do. This is not what the bright-faced 17-year-old entrepreneur set out to do when I went out to conquer the world. Life's got to change. And so we sort of went and did the classic young couple move of like, let's go buy a property. Now, it's really interesting because at that time, I remember talking to my business partner at the time, and this is a snapshot into the psyche of pretty much every Australian. Property doubles every 7 to 10 years, right? We always get told this thing. Property doubles every 7 to 10 years. How great. And I actually remember saying that to my business partner. I was like, that's how property works, right? It's you just buy, and we're like, yeah, you just buy anything. Just buy any property and off you go. And so, funnily enough, Gabby and I actually went out for a bike ride one Sunday afternoon because we were actually bored. It's quite funny. So we just go, yeah, what are we doing? And we ended up in this like showroom, and we totally got sold, schmoozed by this absolute slick salesman. And we ended up signing a contract to buy an apartment. We were like, yeah, great. Property doubles every 7 to 10 years. This is going to be our ticket to freedom. And I had so much hope wound up in that. I was like, this is the thing. This is the thing that's going to change. This is the thing that's going to give me a pathway out of the prison that I'd built, the business that I had, which was a total nightmare. It was an absolute nightmare. And I kind of put all my hope into this vehicle, which, funnily enough, we pretty much made every mistake you can in property at all. You name it, we made it all in one fell swoop. And that kind of started a catalyst for us to try and learn, okay, hang on a second, how do we actually master this game? And through all of that, we end up developing the skills to be able to start helping other people. And from that realization that I could actually do something that had more purpose, something that I was really driven by to help other people succeed and to avoid the failures that I'd encountered and stuff. That's kind of what led us to want to start the buyer's agency.
Yeah, nice. It's funny. I don't want to put it as a blanket case, always the case. But there's a lot of clients and people that I've connected with who've had histories of, and it's maybe an Australian thing perhaps, had histories of drug abuse and those sorts of things, going really, really hard, myself included, and many of the people that I used to hang out with. What are your thoughts on why that's such a big culture in Australia? Have you thought at all about any of that kind of stuff?
I've thought a lot about all of that. And then you got to remember my background is in events. You know, when I'm talking events,
Yeah.
I'm talking like huge, like acid binge kind of raves and stuff like
Yeah.
that. So I put a lot of thought into it, and I think there's a connectivity between, and this is definitely not an absolute, right? This is definitely not an absolute, but I think there's a connectivity between, not so much the Australian culture. I think that people get stuck into everything everywhere, but more between drug use specifically and entrepreneurs. Now, there's a difference between successful administrative business types who can achieve high levels of success in business, and there's a difference between that type of person and what you could probably consider a pure blood entrepreneur. And I think there's a huge difference there between a questioning mind. Now, a truly questioning mind is a mind that doesn't rest. It's constantly asking, right, what is this? Why is it? What's it made of? What happens? Like, can I pull it apart? What happens if I pull it apart and put it back together? What's inside there? How do I get around it? Who's ever thought about this before? It's all of this stuff. It's this constant questioning of the very fabric of the universe. And I think there's a huge distinction to be drawn between, you know, the people who like for me, I can talk on a personal level. I deliberately got addicted to drugs. This is going to sound totally nuts, right? But I remember there was a point in my life, and I wanted to understand what it was like to hit rock bottom. Like, I wanted to understand. I was like, this is like when I was like 18, and I made a conscious choice. I was like, okay, cool, I'm going to do it. Like, I'm going to do it. I'm going to see how far I can go. And over the course of like 2 years, it was wild. We're talking like gang warfare type, like just nuts, kind of like deep into it. And I got to a point where I went, oh, hang on, here's my turning point. If I don't try and turn back now, I'll never escape. But it was that quest to understand. It was like, okay, I've gone far enough. I can now see what's at the edge. Okay. Sure. And now I don't want to go past that edge. And I think that there's a correlation between people who have that questioning mind and wanting to explore, you know, more experience and everything like that. Does that make sense?
It does make sense. Yeah. I've thought about it as well. And it's funny because I think there's some, like for myself, when I look back on it now, I can see that I guess I was yearning for something. You know, I probably felt not very well understood. And I don't want to wear it as a badge of importance or anything like that. But, you know, I definitely learned a lot about myself during those times. And when I look back on it, I hated it for such a long time. Like, I really was quite ashamed, I think, about it. But now that I've kind of owned it a lot more, I've just found that there's so many people, particularly for me, young Australian men, I find, who've had histories of taking very large quantities of drugs. You know, my partner, she's French, and like, you know, I will tell her stories about the stuff that, you know, we used to do, and she would just be like, what is wrong with you? Like, this is just like, why is that okay? But yeah, I guess that creates a lot of energy, right? And you can transition that into building a business and into doing things more meaningful. And it sounds like you really had that shift when you met Gabby, your partner.
Totally. But just to your point there about the societal need for overindulgence, I think that that's a symptomatic result of the dissonance between the identity that we feel like we're supposed to have in society and the identity of who we are really. And I think that it's that dissonance that causes people to try and deaden their emotions and their spirit and everything like that. Some people use drugs and alcohol as a way to expand the way they feel, or to at least explore new parts of their psyche, and other people do it so that they don't have to think about who they are. And I think that's symptomatic of a greater societal dissonance.
Yeah, I agree. So for all the drug taking business people out there, there's a path. There's a path through this and out the other side. Obviously, you don't want to still be taking drugs if you're trying to launch your business. It's quite difficult, as Goose can attest to.
Yeah, totally. Look, life changed. I've been sober now for a couple of years, right? So, and oh my God, life is infinitely better, right? So I'm certainly not going to. I'm certainly not saying like, yeah, everyone go out and get trashed. Not at all. Like, not at all. Like, it is so many orders of magnitude better. Without any of that kind of stuff, and the productivity is higher and business success is better, and, you know, life's better. So it's good.
Yeah. Yeah, my only drug experience actually that I've had in the past few years, I took ayahuasca a couple of times, as you know,
Yeah.
and that's something again that gets floated around in entrepreneurial circles like quite a lot. And I guess I would say about that, just to mention while we're on the topic, these aren't things that I typically talk about on the podcast, so it's kind of a good platform to kind of open the door on that a little bit.
Yeah.
I went and took ayahuasca twice, and in particular, the second time really derailed me for probably close to 12 months. Like my business literally went backwards for 12 months. And this is one of the things that people don't necessarily talk about. They're like, "Ooh, ayahuasca, have this really amazing visual experience and these sort of things." But my experience has been there's just so much challenge there as well. So people often say to me, "Ben, when are you going to go back and do ayahuasca?" And I'm like, not for quite a while, I think, because I want to focus on my business and building my life, and getting grounded in reality. And often that stuff can be a pretty big slap in the face at certain times.
100%.
Yeah. Would you be open to doing something like that? Ayahuasca?
Totally. I totally, but I don't feel the need right now.
Yeah.
I'd be open to it again. Look, I think my mind has been opened and it's plenty open enough for where I am now. And I don't feel like, I feel like there's enough for me to explore right now.
Yeah.
There's enough newness within, like everything that I need is inside.
Mm.
And I don't feel like there's an untapped source. I don't feel like there's anything else that I need. I just need to spend more time with what is.
Yeah. 100%. Nice. Now, when you made the transition, it was right around the moment that you met your partner, Gabby.
Yeah.
Do you want to tell us a bit about that transition and what happened on the back end?
Yeah, totally. So when I met Gabby, it was like a couple of years before we started our buyer's agency business. Best thing that's ever happened to me, meeting Gabby. She's the love of my life and a total legend. She's the best. When I met her, that like young love story, cool. We did all the stuff. We traveled around. She came and worked with me on festivals. We traveled the world, and all of that was happening. And at the same time, I was actually running my own music festival. Now, 3 years of successfully losing money every year on a music festival, plus all of the other stuff that was going on. The net result is that I ended up basically bankrupting 2 companies, which was less than ideal, or putting one into liquidation anyway. So that was kind of a stepping off point for us. Now, we'd actually already decided that we were going to step off and do something else. So I guess it was probably a result of the energetic stepping away from one arena and into another. I had no idea what I was doing. So for 15 years of running businesses, I didn't know what a balance sheet was. Employment contracts, what's that? Like literally nothing. Didn't know anything about marketing. Didn't know anything about, all I knew was how to work really hard, right? And I was good with people. So it was right around that transition period out, like festival just failed for the 3rd time. Like life was on fire, like I was literally just felt like the whole world was burning around me, and I just had to try and stay calm and keep walking through it just to see what was going to happen on the other side. Around about that time we met you, actually, thanks to the awesome power of Facebook ads. It's funny how much Facebook ads can completely change your life, right? So
it's cool, isn't it?
It's so funny. It's so funny. I still remember like the pathway of, I clicked on the thing or whatever, and then I got the email and it had like the picture of you, and I'm thinking, oh, who's this guy? And there was so much positioning. I still think back to that because there was so much interesting positioning just in the market. Like I downloaded a guide and did all the stuff and ended up on the call. And because I wasn't used to it, I can still think back to that and be like, that's how people experience coming into a new brand. Anyway.
Yeah.
We didn't know anything about marketing, advertising, any of that kind of stuff. Didn't even know anything about being a buyer's agent for that matter, but we decided that's what we were going to do. And then we started working with yourself and started transitioning into a whole new and wonderful journey and world. Yeah.
Nice. Yeah, it's funny because people, especially in that startup stage, one of the things I often see is that people put so much effort into like wanting to get better at the craft. And I think that's super important. And I see that in you. But I think something that's really unique about both yourself and Gabby is that you really understood that there's the craft, but there's also the business. Like, and they're two distinct things, right? You've got your marketing, your sales, your operations, all of this here. And then you've got your craft. And everyone wants to be, 20% better at the craft. No one wants to be 500% better at running the business,
Correct.
And you guys really mastered that, like probably the most successfully I've seen in a very, very short period of time. You guys just committed.
Too successfully is what I would say. It was actually it was actually a problem. Right? We actually had some issues there. So look, we were brand new in the whole buyer's agency world, the whole real estate space. All my totally like left of center friends are thinking like, what the hell? You're going into real estate? Like it was a complete shift in identity, and not real identity, not actually who I am, not who I am on the real side, real inside, but there was this whole. I was becoming something new. I honestly, I felt like a phoenix. Like I felt like I was burning off so much of myself and becoming something greater. It was a crazy few months from a spiritual and emotional level, not least of which trying to work out how to start a business, run a business in a whole new industry and do all that kind of stuff. Now, first few months, pretty much nothing happened. We had no money. We had nothing, right? We literally, I think we closed down the previous businesses, and I think we had like $5,000, right? Like that was it. Like not just that was it for food. We didn't know for how long either, and but we just knew that we just had to make it work. So we did a bit of the burn the boats kind of strategy, which some people might say don't do it. I definitely think if you want to get somewhere fast, it's a pretty good way of doing it because you have to.
I agree,
but it's high risk. Right, that's the reality. But if you know where you're going and you know that you're not going to fail, and if you know that the only way that you will fail is if you stop, then you just keep going. Now, the net result is that the sort of first few months were pretty much a flat line, and we had no revenue, and it was terrifying, but it was also exhilarating at the same time. And we spent that time developing our skills and our craft and all of that kind of stuff. And then in a very short period of time, we grew by, I can't even remember the numbers. It was like 600% over 3 months or something crazy.
Yeah.
Or could even be more, which was fantastic until it wasn't, So we learned some lessons around structure and, team building and a whole bunch of stuff through that period. But yeah, it was cool. And, and thankfully we've been able to serve a lot of people. It's not really just about the business growth for us. Like when we started the business, we started it not because we thought, we can make a heap of money in real estate. That was not even it at all. It was, I think maybe imagine if we could just help like 5 people this year. Literally, it was like, just imagine if we could help 5 people. Just imagine if we could help people. And that's the whole thing. And then, net result is over the last year, we've had about 70 clients, not 5. And, it's like, it's grown quite well.
Amazing. What would you say were the big breakthroughs, like those moments where you went from where you were, say struggling to get things to work, 5K in the bank, going, oh shit, we better sort something out here, to 70 clients within 12 months and on, decent order values. These aren't lower ticket sales. These are really decent sales.
Yeah. It's on the higher end of ticket value. What changed? I think there was a few turning points. I think it always comes down to surrender though, really at the end of the day. I think the first turning point was really just letting go of the past and just letting everything go and just basically just committing and not just in like, I'm going to do this and make some proclamation, but a deeper emotional, spiritual, like let it go and just give yourself over to the universe, which might sound a little woo-woo, but I think that there's when I look at my peers in the industry, and I'm members of masterminds and stuff, and I spend a lot of time with other people who are in similar positions. I think the greatest differential between not only who we are as a business, but also how we help people, and also like our whatever degree of success you want to call it or whatever, but our ability to grow the business is really come down to that preparedness to look what's not in the business. Like, it's not all about business. Like if you want to succeed in business, you got to realize the business is only about 30% of it, right? It's not even 50%, because the mechanics are okay, but without the energy being in the right place. And anytime we've ever gotten to a blockage in the business, the things that have changed the most have been resulting energy changes. So firstly, there was like the transition into, what we call the new world, I guess, like when we're like, okay, we've burnt the boats, we're doing the thing, and really submitting to that. And then the second, after we'd had no clients for like months, we came to Sydney for the first time. We live in Sydney now. We came to Sydney for the first time. We're like, oh my God, this is amazing. And we saw Tony Robbins, but not that it didn't have a profound impact on me or anything. But we swam in the ocean. We just had this energetic shift. And then we got back to Melbourne, and then the phone rang. And the phone rang, and the phone rang, and the phone rang. And this kept going. And we were like, oh my God, what is happening here? It's because we built the machine. But you got to remember, when you build the machine, it's just a mechanism, right? It's a device, right? But if if you're not operating device, there's a whole kind of like entanglement kind of process there, which, obviously we've spoken about this quite a lot. But it was those times when we're like, well, we built the machine. Why isn't it working? Why isn't it working? Why isn't it working? And then we just let go. And then all of a sudden the machine goes into overdrive. And we're like, whoa. And then we'd run with that for a little bit. And then we get to the same point again and be like, oh, hang on. So what's going on here? We've put more bits into the machine. Why aren't we getting more out of it? We put more stuff in there. What's happening? Why isn't this working? And then, and then the next big shift for us was we moved to Sydney, because we thought, oh, that's pretty cool, isn't it? So we moved to Sydney, and we moved to Sydney, and we moved to Sydney, and oh my God, it was like we had to start building a team. It was like I literally couldn't keep up. with the levels of interest, and I was like, oh my, wow. And so I would say that the biggest shifts have come not from the mechanization of the business, though that is important. It's from being in tune with yourself. So I think that's probably the biggest thing.
Interesting. Yeah, I agree 100%. That's been my experience too, is like you can get marginally better at a tactic. You can install a better strategy. But for me, the biggest breakthroughs come from usually when I decrease the emotion, when I take the emotion out of it, either drop into a space of detachment where I'm like happy with or grateful with the outcome, where I'm just kind of cutting away, or if I'm not too, I guess what I'm trying to say is like, if you're holding on to the picture of the business, it has to be this way. It has to be this. I saw that guy run a Facebook ad. I have to be able to do that. Yeah. It's like your model of the world. It almost starts like slapping you in the face.
Totally. I was talking to this another business owner actually. We catch up fairly regularly. We're catching up for coffee, and he was talking to me about our ads and stuff like that, right? And it's, oh yeah, all good. We're having one of those chats. And then I was kind of explaining to him, okay, you can do this and you can do this, and this is roughly how you set it up. And he was so caught up in the technical, but shouldn't I like retarget like this? And then what if this like this, and like all of this super like nuanced stuff, which, maybe is going to give you a 10% gain or whatever. Hey, don't get me wrong. Who doesn't want a 10% gain? A 1% gain in every area of your life. Watch it change. But I said to him, I was like, unless you're doing $1 million a month, right? And unless you're doing $1 million a month, this won't break. Like, you'll get the results you need out of it, right? So focus your energy on other parts, because I think a lot of people can get caught up looking at trying to master those one little bit, and they lose the bigger picture. At the end of the day, there's so many ways to do things. It's really about how you're communicating and with what intention. You could study to be the best copywriter. You could study to be that best ads guy. You could, all of that kind of stuff. Now, thanks to working with you, like straight up, I had no idea how to do any of that kind of stuff until we started working with you. Yeah. So the net result of learning all of those skills has given us the capacity to pretty much grow our business as we want, right? And this is the crazy thing. We can grow our business as we want. Like, I know that based on a certain level of mechanics, I can kind of tweak the dial up to a point. I couldn't grow a $10 billion business with the skills that I've got. I'd probably struggle to grow a $10 million business with the skills that I've got. So I'm not a professional. I'm not an expert at ads. I'm not an expert at copywriting. I'm not an expert at really like a whole bunch of stuff. But what I say is I'm a really, really, really good amateur, right? And as people get so lost in going, oh, I've got to master this, or I've got to, what if someone laughs at me, or what if this thing doesn't work? And it's like, you don't understand how far you will get in life just by being a really good amateur. In fact, there's this fantastic book called Master Life by David Kekich. Now, the book itself is not like tremendously the best read, but there's this thing called Kekich's Credo, which is one of the most profound set of, ideas. There's 100 principles that this guy, David Kekich, has distilled from his life. It's a very interesting story. But one of the things that stands out to me, I read it quite regularly, that Kekich's Credo, the 100 points, and it says, in business, you only have to be good to get wealthy. You only have to be good to get wealthy. A lot of people forget that. Like, and I'm not saying like, hey, live a life of mediocrity. In fact, one of my biggest mantras is that we need to strive for greatness every day, because to strive for anything else is to strive for mediocrity, and we're better than that, right? So there is that point too. But you just got to remember, like, the action is going to get you a lot further than trying to master everything and piece it all together one bit at a time.
So you're saying better to be a generalist and just pull the right levers in the business, as opposed to trying to be the best ads guy in the world.
Yeah, because if I spend all my time trying to be the best ads guy in the world, I am absolutely confident. There's not even a doubt in my mind. If I decided that's what I wanted to go do, I'd probably end up being like top 1% ads people in the world. I'm not even worried about that. The problem is I maybe not have any idea how to copyright. I certainly wouldn't be buying real estate for people. Like, you would sacrifice everything else. So being a specialist can be fantastic. However, I think that the greatest levels of success in business are going to be found when you are a generalist. Because if you know enough about ads to be able to go and do it yourself, then when the time comes that you want to outsource that, you know the difference between a good and a bad job. Okay, it's that simple. How it works. If you don't understand the parts, if you don't understand how it works, you're essentially trying to outsource responsibility. And you can outsource pretty much everything in life except for responsibility. The moment you try and outsource responsibility, you are basically saying, I am ceasing to want to have control over my own destiny, and I am hoping that somebody else is going to save me. That's what happens every time you outsource responsibility. So anytime you're like, I don't know how it works, and quite frankly, I can't be bothered. Come on, like, I don't want to be the smartest guy in the room. Yeah, but you should know what they're talking about.
Love that. Amazing. Any challenges that you would warn business owners of on the path to getting their first 70 clients? So going, in your first 12 months, most of the time that takes people a little bit longer than 12 months.
Yeah.
What are some of the things that, I guess, the pitfalls or things that people can look out for?
If anyone's listening to this and they're like me, I would try and tell them to go a bit slower. Not like I'm 100 million miles an hour all the time, but what I learned was that slowing down can help you speed up. So rather than trying to grow your business by 200% a year, because the reality is when people think about fast and big, they're actually thinking short term. They don't realize it, but they are. I've never encountered anyone who says something like, I want to triple my business in the next 12 months that is actually thinking about what their business is going to be like in 10 years time. Right? I don't think that happens, because everyone's like, I want to grow by like 200% this year. And it's like, yeah, but what you're actually saying in your own mind is, I want to grow up by 200% this year. And then I'm done. Like, I'm done. There's a cutoff point in the thinking that doesn't extend beyond that point. And there is a part of the mind which assumes that there is nothing after. Right. And it's a huge mistake I see a lot of people making, particularly, in this current like digital marketplace and everything like that, because, if you have info products in this, you can scale quite quickly, but it's such short-term thinking. So I would much rather now knowing what I know now, I am not focused on revenue. I'm focused on profitability. I'm focused on client satisfaction. Like I in the next 12 months, we could have half as many clients. We could have a quarter. Wouldn't worry me. I'd be totally cool with that because I've let go of my ego, right? And I've started playing a longer game. Now, once you do those two things, your business will grow by an order of magnitude, right? Because once you start thinking not what's business going to be like in 1 year or 2 year or 3 years, what's this business going to be like in 10? What's it going to be like in 20? If you actually take the time to really think about that and really map it out, you'll realize two things. Firstly, 20 or 30 years is a hell of a lot longer than you think, right? Now, I'm in my early 30s. You're nearly 30?
Nearly. I'm 28.
Yeah. So, and you think about it like 30 years ago, I was 3 years old, right? So in 30 years time, could I have a multi-billion-dollar business? Yes. The thing is though, you don't have to try and get to a $10 million business in year one to get to a $1 billion business in year 30. You might actually, if you do the maths and compound it and do all of that kind of stuff, you can actually find that to get to a $1 billion business in 30 years, you might only need to have a $300,000 business this year. You could probably have a $100,000 business this year, and you don't need to try and grow by 200%. You could maybe grow it. You could grow it like 10% a year.
Yeah, it's compound interest, right? It really stacks up there towards the back end.
Totally. So I would think that the most important thing that anyone should focus on is firstly profitability, and secondly client satisfaction. I think really if you can focus on those two things, everything else kind of fits around it.
Love that. Nice. Now, moving on from business, because I wanted to get you on for two reasons. Obviously, you've got a wealth of business knowledge and understanding, but also on the wealth building side, you've really studied and really moved into that space, coming off the back of starting the business. Your goal is to really help people to build multi-generational wealth.
100%. Yep.
Do you want to tell me a bit about the vision and where you're taking the business?
Yeah, totally. So you got to remember the start of this, the genesis of this journey for me was a few years before I even had tried to build, tried to buy a property. And I had nothing, I had no super. I'd been running I had no superannuation, I had nothing. And I was like, it was this desire to be like, okay, am I just going to be some old grey drunk when I'm like 70, or like what's going on here? And started thinking about the kind of life that I wanted. Now, the interesting thing now is you're right. Like the benefit of the life that I've lived up to this point has given me the capacity to think strategically and laterally about ideas and institutions which have largely remained unchallenged and unchanged for like the longest possible time. Real estate is one of the oldest traded commodities or asset classes in the world, and there's all this kind of stuff. Now, there's a couple of things. So you'll have to try and keep me on track here because I'm likely to go quite tangential with all of this kind of stuff. But there's a few considerations when you want to say build real wealth. Now, as a business owner and an investor and a business owner who helps people invest, there's some really fundamental things that you really need to consider. So firstly, this podcast is for business owners. So I'll talk about it from that context, but you can apply this in a family context or whatever. Sure. Now, businesses are, there's only ever two types of assets, really. There's cash flow assets and there's equity assets, or sometimes a hybrid of the two. So business is a fantastic cash flow vehicle if you can get it right. The problem is it's the risk reward factor. It's either like it actually doesn't really give you anything, or it gives you heaps. It's kind of really there's not much in the middle. You either work it out and you make heaps of cash flow, or you don't make that much cash flow. Now, business can be an equity vehicle, but it's predominantly a cash flow vehicle. You don't have many negatively geared businesses. So what I mean by negatively geared business is a business that takes a negative profit position on an annual basis. There are some notable exceptions to that, like Uber and stuff like that. But by and large, businesses are a cash flow positive investment vehicle, very cash flow positive. So that's great. But cash whilst it is king, is not a great asset class to be in because it depreciates in line with inflation, and putting your money in the bank right now, you'll actually lose money. Like you'll have less money. Your dollar will be worth less today, less in a year than it is today. So keeping cash is not a good idea. If you actually worked hard for your money and you wanted to do something, don't put it under the bed and don't put it in the bank. Right? It doesn't make sense. So then you got to think, okay, well, if I'm making profits in my business, what am I going to do? What am I going to do with these profits? Now, if you're like many young business owners, firstly, you're going to be like, I'm going to buy a bitchin' car. I'm going to go out for nice dinners and I'm going to have some cool holidays. And all of a sudden you'll go, oh my God, I'm living sale to sale right now. It's like, hang on, I need to get another sale. Something's happened. Like, I want to go on a holiday, and it becomes very hand to mouth. Once you can break free from that, then you start going, okay, if I'm not going to spend it all on like frivolous consumables, it starts to stack up. Now, then what? Then what do you do with it? Because if it's no good in the bank, what do you do? So there are a multitude of different asset classes. Now, we work in real estate, and I'll explain why, but there are plenty of ways that you can diversify your profit streams, right? There's commodities, and there's really only a couple of asset classes you can invest in. Business, i.e., start your own or invest in somebody else's through stocks, shares, or partnerships, right? So there's business, and then real estate, and then you've got commodities and resources. That's it. So gold, oil, stuff like that. You can trade in those actual commodities. So when you break it down like that, you've only got a few choices. So that makes it really easy. Then you're like, okay, well, if I've made my money in business, am I going to go and invest that in somebody else's business, like shares and stuff? Maybe some of it, maybe not all of it. The great thing about shares is because businesses can grow really quick, because they're volatile. The volatility is good and bad. The volatility can mean that you get really fast gains, but it will also mean you get really fast losses. The downside with shares is that you don't have any control. You have no control. You're like, I hope this CEO is not an idiot. Here's my money. And you go, there you go. You buy some shares.
Yeah.
Now, commodities are really different and interesting. Commodities and resources, completely different and interesting game, and there's value in that. The benefit of real estate, though, is that you have a high degree of control and it's highly stable and it's very low risk. And there's a reason that I think it is awesome for business owners. Business is inherently high risk. It's high risk, high reward. That's just how it goes. And the people that are good at it are just good at managing the risk. Simple. So if you could take your high risk cash flow based asset and transfer some of that surplus cash flow profitability into a more low risk and long-term asset, why wouldn't you? Now, jump in anytime you want, just in case I'm running off. But the other thing is like, why wouldn't you? Well, maybe it's not going to give you good returns, or maybe it's this and maybe it's that. Now, I speak to a lot of entrepreneurs and business owners who have thought about investing in property, but they've said stuff like, oh yeah, but it's like going to take 30 years and there's no liquidity and blah, blah, blah. And it's like, yeah, that's 100% correct to a point. If you think about the old way of investing in real estate, i.e. pretty much the way that everyone up until, now has been doing it, is try, and I'm going to use the word try very specifically, try and buy 5 properties. Try and buy 5 properties, put them on a principal and interest mortgage, pay them down over 30 years, and then you're good. So firstly, there's a couple of problems with that. A, you're going to wait 30 years. I don't know any business owners that really want to wait 30 years for gratification. Do you? All right.
Not many.
No,
That's a problem.
Yeah, it's a problem, right? So 30 years to get satisfactory gratification and try and buy 5 properties. Because here's the thing, 93.6% of property investors never get past 2 properties, ever. That's a big problem. The reason they don't get past 2 properties is because they reach a serviceability cap. They reach their debt ceiling and they are no longer able to continue to borrow. And that's largely because they don't buy the right assets. Now, you can crack through that, but let's just put this simply. If the goal is try and buy 5 and pay them down by 30 years and you never get past 2, do you think you're going to get any kind of gratification about that when you're at the end? Or are you still going to be waiting on a pension?
Yeah, interesting.
Super interesting.
One of the things I've seen consistently, and it comes back to my journey as well, and I think we attract the people that kind of match and mirror our journey, but I speak to hundreds and hundreds of business owners all the time.
Yep.
Very rarely do business owners talk about wealth. Very rarely. There is a huge subset. It's almost like there's two types of business owners. There's the business owner who builds their business to sustain their lifestyle. And I think that's the majority, just from my own personal experience. And about 2 years ago, like I had quite a big breakthrough around this, was that I was simply building a business just to sustain my lifestyle, and that was pretty much it. And look, I had a great lifestyle, could travel wherever I wanted to travel, could do what I wanted, could live where I wanted, could essentially create the resources to do anything that I wanted. But what I realized was I was on this hamster wheel of activity where it's almost like 100% of the revenue in my life and the creation was based on active forms of income. And I think the real huge benefit, if you were to, for example, look at your business, so let's say your business is like 50% profitability, let's just say, just for simple. One thing I found that's really powerful is take 25% of that for your lifestyle and your consumables, and then 25% for your investment cycle. And that to me was just like a real click into a different gear, because it was very easy to live with this like approximately the same amount of stuff, except I felt like I was slowly stepping my foot off the hamster wheel, and I could get more rest. I could actually sit down and go, you know what, now I've got a cash buffer kind of sitting here. Now I can look at investing in stocks. I've got new opportunities that are happening. I can invest in property, that kind of stuff. Why do you think there is this huge dichotomy between people who are just working their whole lives to just have a lifestyle, and then small segment, I'm not even sure what the percentage is, but maybe 5%, maybe 10% of people who are actually investors and building that journey?
Yeah, it's really interesting. So there's a couple of things. A lot of business owners, as you say, get stuck on that hamster wheel. They trade one hamster wheel for another. They're working for somebody else and they think, screw this, I can do this better myself. And they start their own business and they literally just trade hamster wheels. And in fact, if they'd stayed as an employee, they probably would have had more money and more freedom, to be completely transparent. Now, the reason that I think people don't manage to make that bridge is they don't have the information. They don't understand it. I mean, you got to realize that only 8.7% of the population invest in real estate. Like one could even be one investment property. Only 8.7%.
Wow. Yeah, that's crazy.
It's crazy, right?
I would have never thought that was the number.
Yeah. Only 8.7% of the population, and only I think it's 3.4% of them invest in cash flow positive properties. We'll get to that in a minute, why that's important.
Yeah.
Right. So this split is, so the net result is that most people are getting financial advice from people who have no idea about money or wealth. That's the reality. It could be from newspapers. It could be from their parents.
Schooling
It could
system.
be from schooling system. It could be from Dave at the barbecue.
There's not much financial stuff in the schooling system, is there?
Oh, God. No. I never learned anything about profits and tax and all of that kind of stuff. So the reality is you even get people who are, financial advisors, who are accountants, who are in the finance world, the money world, who don't understand it, who don't understand. Now, the reason that they don't understand is because they don't question. And so the reason they don't question is because they've been told a story, and they've been told a story by someone who did it once before. Okay. So this is where people get stuck in archaic belief structures. So there's kind of like there's a big split. Oh my God, people who make money are bad, right? There's that, right? People who invest in property are bad people, which is just crazy in itself. And they're the reason that property prices have gone up. Like, there's a lack of education about that. There's also a lack of education about how to do it. There's also a lack of education of why you would even want to do it. I say to people all the time, like, people come to me and they're like, oh, I want to build a portfolio. And I'm like, what? Why? Like, why would you even want to do that? Why is that a thing? Why is that? Why would you want to take your money and put it there? And a lot of people just have no idea. And I think that there's a huge knowledge gap that's actually stopping people from achieving more in their life. Now, it is my deeply held belief, and in fact, it's kind of the core driver of why I'm doing all of this, is that if we can help to create more freedom, more choice, more abundance, more prosperity, more financial literacy, more, like if we can help people to break through that barrier, the net result of that is that they are going to have much bigger positive impact on their small community, right? That small community being their family and maybe the people around them and their great extended family. And what that happens if you do that, if you throw a bunch of sand into a pond, you're going to notice that it'll create a wide ripple, right? So you start with small dots and it'll create a big ripple. This kind of goes back to my purpose that I wanted to change society from the get-go. Like I was like, should I be the prime minister? What should I do? How am I going to change the world? And I've now convinced that the way to do that is by helping people build wealth.
Yeah. Well, it's like, it's pretty high purpose, isn't it? Like if you look throughout history, a lot of the people that have really impacted change have either had access to wealth or were very wealthy individuals.
Yeah, you'll struggle to find any meaningful impact that's happened without wealth. You can even say someone like Mother Teresa. She didn't have a lot of money, but she was damn good at sales. She was the best fundraiser. She got loads of donors. Or everything she did, or there was still capital behind that. So you cannot deny that. Now, I think that there's a couple of key points that I think people need to think about. Firstly, I really want to share people just so they can go do it themselves. What types of properties you're going to buy if you actually want to not fail at this whole scenario. And then also there's another thing that people need to consider, because they always talk about financial freedom. Now, people talk about financial freedom. Business owners talk about exit strategies. It's really about going, how can I create choice? Right? What would be required in my life outside of what I currently do? What would be required in my life for me to just be able to decide to do whatever? Go to work, don't go to work. It's not about, a lot of people think financial freedom and I say, well, what would that be to you? And they're like, $250,000 a year passive income, blah, blah, blah. And it's like, that's financial obesity, right? That's like, yeah, cool. That's nice, right? But what's freedom mean? Freedom means choice. Okay. So how much money would you need in order to be able to do whatever you want? To actually not care if you show up and make another sale in your business. To actually not care. Now, this is what we call a minimum viable life. So everyone knows about minimum viable product, all that kind of stuff. But minimum viable life, what is your minimum viable life? I think you'll find that it's actually really low. I've calculated my minimum viable life to be about $35,000 a year. And that still allows me to go out on date nights with Gabby and all of that kind of stuff. If you actually work it out, it's probably pretty low. So, and there's a huge dissonance between 35 grand a year and like $250,000 a year. And once you can actually start to pin that down, you suddenly go, hang on a second, this huge esoteric build wealth and create freedom and blah, 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 which seems like this hugely aspirational visionary somewhere off in the distance. It's like you can actually achieve that in really a quick amount of time. In fact, if you're strategic about what you're doing, you can hit that number depending on your starting point and blah, blah, blah. And there's obviously variables. You can hit that number in 5 years. So imagine if you could take actions right now that would allow you to, in 5 years' time, or even less, it depends on your starting point, of course, right? But let's just say 5 years' time or less. Imagine if you could take actions now that were going to allow you to have that freedom, that choice, to be able to just do whatever you want, to actually just go, you know what, I don't want to do this anymore. I'm going to travel. I'm going to go live in India, or I'm going to do whatever.
I just need a book budget. I need a book and an education budget, some good food and a good apartment, and I'm in the clear.
Totally. You should work it out. Put pen to paper and go, what does it actually stack up to? And we do this every week, right? So Gabby and I, our MVL as a couple for our life is about 60 grand. And that's a good life. That is a life where we don't go without. That's not living on noodles, right? That's us living our life on a without splurging. That's good. Still got a book budget, still got an education budget, still got all that stuff. So when you start doing that, then you go, well, okay, well, how do I do that? How do I achieve this thing that most people never achieve? And then how do I do it 600% faster than the average investor? That's where the key comes in. That's where it gets really fun. And that's the strategic capacity that we brought into this space that is actually helping people, which is so awesome.
Love it. Love it. You were talking before about the difference between positive and negatively geared property. Do you want to share that with the audience?
Yeah, totally. So a lot of people think that they need to buy. So there's a lot of people who earn a lot of money, right? We all know that. Maybe they've got a household income of $500,000 a year. So they get told, oh, you need to cut back on tax. Because who likes paying tax? No one likes paying tax, right? The tax man's a bad guy. Oh, yeah, right. If you pay tax, you're making money, right? It's really simple. So a lot of people don't think about real estate as a business. It is. Real estate is another business. If you invest in real estate, you got to think about it like this. I know this is a long episode, Ben, but I'm not going to slow down anytime soon. So you got to think about a real estate asset. Any asset you buy, it's in two parts. Okay, you've got the land, and then you've got basically a shop, right? The house, for example, that sits on top of that land, that is your shop. That's your McDonald's. You know how people talk about how McDonald's is actually a real estate company? Well, it's true. They buy the land, and then the shop sits on top to be the cash flow vehicle to pay for the asset, which is the land. Okay. So then you start thinking, okay, well, all right. So I'm a business owner. Now I've essentially bought a bit of land and it's got a shop on it. Now the type of shop might vary. Maybe it's a unit block, right? Maybe it's a duplex. Maybe it's a 3-bedroom house, right? But it's essentially a shop, and it's got to serve the people in that community with one of their needs, right? So just like a milk bar might serve the needs of convenience, access to milk, you're selling accommodation solutions, right? And the types of clients that you're going to attract to your business is going to be dictated by the type of business you have and the condition it's in and how you market that. So i.e., does it have nice paint and all of that kind of stuff? So then when you can start to create that distinction, it's very clear to see, would you like a business that loses money, or would you like a business that makes money? Now, if you lose money in business, you get tax breaks. It's pretty simple, right? If you lose money, you get tax breaks because, hey, guess what? You lost a heap of money. It's the same thing in real estate. It's literally exactly the same. And this is where people make a mistake. They think, oh, well, I want to reduce my tax, so I'm just going to go and invest in a business which loses money. I can't think of a worse way to spend my money. Like, that's just ridiculous. I'm just going to put it over there. I need to lose money faster. It's just nuts. So that's what negatively geared properties are. Negatively geared properties are properties that produce less income than it costs to hold them. So that's particularly when you take into consideration all of the associated services and fees and property management and all of that kind of stuff. Positively geared properties or positive cash flow properties, there's a slight difference there. Positively geared can sometimes be interpreted as does it produce a net positive income after depreciation and a bunch of other stuff? I like to think about it like this. If I buy an asset, does it produce, on a very basic level, does it produce more income than all of the associated costs? So that's property management, rates, taxes, whatever, all of that stuff. It doesn't even need to be that much more. It doesn't even need to be like, it could be $100. It could be $100 a year, but does it produce more? Does it produce more than it consumes? If the answer is yes, then that is going to help you to not get stuck. And that's going to mean that you have an asset which is going up in capital, which has got compounding capital growth, and it's also self-liquidating its debt.
It's almost like there's a knowledge gap between the two types of property. You've got the rich people who are like negative gearing on this side, and then you've got the people that perhaps never even get into property or wealth building. And that's kind of the transition that I guess you're here for, Goose, is to help bridge that knowledge gap between people that haven't necessarily thought about building wealth, but taking them into that area of building, intermediate to high levels of wealth, whether that be $50,000 a year net income or, even up to a couple of million over the space of the lifetime.
Yes, I'd just say something there. You made a point there that like rich people have negative geared strategies, and then there's like the other people. I would go as far as to say, I don't care how much money you've got. I do not know a single investor who's successfully built a large portfolio and also been able to use that as a freedom vehicle, i.e. stop feeding that without it being cash flow positive. If you bought 100 properties, let's just say you were loaded and you bought 100 properties, 200, 500, I don't care, right? And they were all negatively geared, as in like they all cost money to hold. Guess what happens when you stop work? Guess what happens if you get cancer or you want to go on a holiday or maybe your business fails or whatever, all of a sudden you have a vacuum which is just sucking cash out of your life. So I don't know a single successful investor who's actually made it work by doing that. And so I cannot more passionately prescribe the idea that negative gearing is a completely wrong way to do it. The only exception is this: if you've built a portfolio which has enough surplus cash flow to be able to supplement the negativity of one asset, then that works. Okay. But what you've got to remember, you've got to think about it like this. My mantra is, if I were to go into a coma for 12 months, would I wake up wealthier than I am today? Right. Now, if you have a positively geared portfolio, yes, you will. But I don't know a single business that you could do that. If you go into business and you're in business for yourself and you go into a coma for 12 months, you're going to wake up, you're going to have no business. Simple. Right?
Active and passive, right? Because you're
Totally.
passive. You're literally the definition of being passive if you're in a coma.
Totally.
Yeah.
So if you've got a negatively geared portfolio, that won't exist either. But in 12 months' time, the banks have reclaimed it. They've sold it. You ain't got no properties left, mate. Done. But if you've got a portfolio, and it doesn't matter how big it is, but if you've got a portfolio that produces more income than it uses, and then you were to go into a coma for 12 months, I guarantee you would wake up with more money than you went to sleep with. Now that is a powerful concept once you can get your head around it.
I love that. Nice. Well, look, Goose, I think we've kicked on for about an hour now. Let's give people a bit of a call to action. So for the people listening, if they're looking at, like, obviously business owners, is a podcast for business owners. So for these guys who are listening to this and they're saying, oh, wow, okay, I want to get off the hamster wheel of just constantly working in my business all the time, and I want to start this wealth building journey, or I want to accelerate that journey. Maybe they've already started.
Yep.
What would be the best way to reach out to you and start that conversation or anything like that?
Yeah, totally. So there's a couple of ways. So we run a buyer's agency service called Buyers Agents. That is kind of the economic engine that helps you build a portfolio. And our mission is really to help people to build portfolios, not just buy properties. Now, if you want to reach out to us there, just head to dash.com.au. There's links, check it all out, do all that kind of stuff. If you want to get to know us a little better, though, if you want to start to build that relationship in your own time and on your own terms, then I'd encourage you to head to theinvestorlab.com.au. That is we've got a podcast and I've got a book you can get there. There's heaps of free resources, get started quick guides. There's everything you need to know. In fact, I can guarantee you that if you go and digest all that material, you won't even need our help and you'll be able to go and become an empowered investor. So that's my gift to you.
Love it. Thank you. Anything to share before we finish up?
I think this has been a vibrant conversation. What I would just encourage people to do is just to start thinking about playing a bigger game and stop thinking in short-term cycles and monthly cash flow and stuff like that. Start thinking globally about how you want to be and who you want to be and what the impact that you want to have in the next 30 years and what you want to be remembered for and how you're going to do that. And I think that will guide your activities in a much brighter way.
Love it. Thanks, Goose. Appreciate your time.
A pleasure.